All right, we're going to do our chapter 12 lecture. This is our very last chapter. Isn't that crazy? So very last chapter of managerial accounting. And so let's go ahead and work our way through this. This chapter is all about decision making. So I find a lot of this chapter almost to be kind of common sense-ish. And so there's no specific way you have to set up any of this data. It's just basically considering like, should you do something or should you not? And so should we accept a special order or should we outsource or should we drop a product line? And so we're trying to decide if something is a good idea or a bad idea. So for all these costs we're looking at what's relevant between two decisions. So as an example, the other day I was talking to one of my C-based students, and we were talking about whether or not he should accept one internship over the other. And so they're both located in Wichita. So that doesn't differ between alternatives. So it really wasn't relevant to his decision. Like he's going to be able to continue to live in the same place. But if one was here and one was in Kansas City, that would be relevant to his decision. So a relevant cost or benefit is a cost or benefit that differs in total between alternatives. So when it differs between alternatives, it's relevant to the decision. So if one internship pays $23.50 an hour and the other one pays $26 an hour, that's relevant to your decision because it differs between alternatives. Okay, so the first decision, we're going to look at one of each of these. And so you're going to have 5 tabs of homework because you're going to do one of each of these kinds of decisions to practice. So I'm going to walk you through each type of decision, and we're going to see if it's a good idea or what we should do, how we should continue. Okay, so the first one, we are making digital watches. So digital watches are watches like the one on my wrist that shows the time rather than like a clock, okay? So we're looking at digital watches, and this particular company is considering the fact that they lose money on digital watches. So if they lose money on it, maybe they should stop making them. That's a reasonable thing to consider. So as we look at this data, we're like, okay, if we stopped selling them, what would happen? So we have sales, and then we have variable costs to get contribution margin minus fixed cost is net income. So we did this back in chapter 5. When we were doing break-even point and things like that, and we could figure out like how many of these we need to sell to break even and all those kinds of things. But these are all fixed costs and these are all variable costs. So if we stopped selling the watches, how would things play out? Because the issue is right now, the obvious thing to say is we're losing $100,000. Stop doing it. But the important thing is that not all of these costs go away if we stop selling digital watches. So general factory overhead, salary of a product line manager. By the way, this chapter is kind of crude. Okay. So as an example, if I stopped selling digital watches, I would fire that person. Okay. So that person would go away. I would no longer advertise digital watches. That would go away. But rent on the factory space, it depends. Do we rent it in our own facility? Like, is that like an allocated number where we make like all of our products? Will that cost go away or will it not? There's 3 asterisks. The digital watches are manufactured in their own facility. Okay, so then the question is, can we get out of the lease? Can we stop renting that property? And in the long run, absolutely. I mean, maybe we can't get out of it this month, but we can not sign a lease for the next time. So that cost should go away, just like the product line manager. We can fire that person. We can stop renting the space. We can stop advertising. But there's these 2 items here who only have 1 asterisk. So general factory overhead. General factory overhead would be things that relate to the entire factory that are being allocated to the digital watch brand. So maybe it is the overall supervision of the factory, or maybe it is the security in the parking lot where the factories are being operated out of. Or maybe it's utilities. Utilities would relate directly to the factory space, I would guess, since it's in a separate facility, but it's just overall general, maybe this is the cleaning of all of our factories. And so we're allocating it to all the different branches. So the question is, does that cost go away if we stop making digital watches? And so it says allocated common costs that would be redistributed to other product lines if digital watches are dropped. So what would happen is that cost would not go away. it would get reassigned to other divisions. So what I think about here is at the university, there are 6 divisions. There is business, fine arts, math and science, liberal studies, education, and marriage and family therapy. So there are 6 divisions at the university. So if we decided we were going to eliminate one division, some costs would go away, but some costs would not. So if we eliminate, let's pick on myself because I hate to pick on other divisions. So if we eliminate the business division, they can fire me. They can close down this building. They can get rid of Jim Long and Sean Cash and all of us. We can all go away. But would the president of the university take a pay cut if we stopped having the division of business? I think she'd lose her job altogether because she would never decide to get rid of us. But regardless, right? She's not going to change her pay. The human resource department is going to continue to exist. The IT department is going to continue to exist. The registrar's office is going to continue to exist. All of those costs that are allocated to different divisions are not going to go away just because we stop operating the division of business. Okay, so should we drop the product line? And I'm not sure yet. So what we would look at is we would have the keeping of it and the dropping of it and see what would happen if we drop the digital watches. So this is my preferred way of calculating this. This is the exact same data as up here. Okay, so 500, 120, 575, 300 with a loss of 100. And I like to go right next to it. And I'm just like, all right, what would happen? If we stop selling digital watches, we will have no revenue. We do not need to manufacture it. We do not need to ship it. We do not need to pay commissions. So we have no variable costs and we have no contribution margin. Revenue minus variable cost is contribution margin. But this cost stays. Fired, no need to advertise. The rent was in a specific location and we were able to get out of that eventually. So that would go away. But this 30,000 would not go away. That would be like the accounting department and HR and IT and stuff like that. So in total, I have 140,000 of expenses that do not go away. So if we stop making digital watches, we lose 140,000. So the question is, do you want to lose 100 or do you want to lose 140? And you would say, I would rather you lose 100. So we don't lose 100,000 because the digital watches aren't doing well. We lose 100,000 because we have really high overhead costs. We have really high overhead costs. And so if we can cut back on some of these, that would make a huge difference. And so the digital watches actually bring in 500,000 and they only cost 200,000 as far as variable costs. So they contribute 300,000 toward covering fixed costs. So they're actually not doing that bad. So what we have to do is look at this 300,000 and does it cover the costs that are specific to digital watches? The costs that are specific to digital watches are the product line manager, the advertising, and the rent on the factory space. And it does cover that. So this is the way I usually do the calculation. And so in this situation, I would say, no, do not drop digital watches. You would lose money. You would lose 40,000. Another way to consider it is we would lose that 300,000 of contribution margin, but we would save these 3 costs. So we would end up 40,000 worse off if we go ahead and drop them. So the answer is don't do it. Don't drop it. Okay. So, okay. So the next one we need to do is a make or buy decision. And so we're going to go through examples of all of these different kinds of decisions. This is the second one. Make or buy is the idea of outsourcing. So when you outsource a product, you decide to stop doing it yourself and just buy it from someone else. Another example might be that like we could outsource a specific task here at Friends University. So right now we just went through our benefits elections. And so we were trying to decide what kind of health insurance we want. Like, do we want the high deductible health plan or regular? Do we want to add dental? Do we want to add vision? Like all the different healthcare stuff. So HR is on my mind because I just did that election this weekend. So I guess what I would consider is what would happen if instead of having an HR department here at Friends, so it's over in Sumter next to like in that small building between the clock tower building and Casado where you have lunch. Okay, so in that building is Sumter and that's where the HR department's located along with other administrative offices. So if we stopped having HR as a department, like, would we save money? So if somebody has to process paychecks and process benefit elections and things like that, so we would have to hire like an outsourced company to take care of our HR stuff, but we would be able to get rid of some employees. So what would happen if we did that? And what we would look at is like what costs are saved and what costs are will continue. And then from there, we would decide if it's a good idea or not. Now, there's all kinds of things to consider that are not quantitative. So if we did something like that, I wouldn't be able to just pick up the phone and call the HR department. And I know that person, I see them on campus all the time and be able to ask them questions or just swing by their office, because it would be external. So there's all kinds of things to consider that are not like quantitative things. In this class, we're going to make quantitative decisions. And so we're going to make our decisions based on the numbers. But believe me, there's a lot more than just the numbers that go into these decisions. And you do want to consider those things. So if we were to fire, 6 people from our faculty or from our staff here at the university, like what does that do to morale and things like that? So you have to consider all those things. Okay. But in here, in this chapter, I'm just going to consider the quantitative side to keep it clean. And to know that once you have the financial numbers, then you make your decision based on that and all of the non-quantitative things. Okay, so back to this. We are currently making this product. This is a part for one of our products. Use these. Oh, sorry about that. Okay, so I need to I'm looking at this specific part that goes into one of our products. As an example, like if we were making cars and we have like the engine and all of the components and the seats and everything else, like maybe the stereo, maybe we currently make our own stereos and then we put them in, but we could also just buy a stereo from Sony, drop it in there. So that's what this alternative is looking at. So we presently make a part that's used in one of our products. The unit product cost is direct material, 9, direct labor, 5, variable overhead, supervisor salary, and general factory overhead. Okay, so we currently make it and it costs us $30 to make it. And this is based on 20,000 parts per year. Seems important. And the total cost right now is 30. And an outside supplier has offered to provide it to us for $25 a part. Right now, we're paying 30. So looking at this, I would say, absolutely, do it for 25 instead. It would save us 5 times 20,000 parts. And that sounds like a good idea. That's $100,000 in savings. But the key here is not all of the 30 will go away if we outsource. Now, if we can fire this person, then that cost would go away, but this 13 is not going to go away. Maybe some of it will though. And so it says common costs allocated based on direct labor hours. So it's based on like how many direct labor hours, and we are just giving some of this cost to them. Now, often some of it will go away, but not all of it. So that's one thing you just kind of have to keep an eye on. So they might have said, $7 per unit would go away, but not the other 6. And so when we do these alternatives, it's actually really clean to make this little table. And when I made this table, I know right now all the numbers are in there, but basically all you do is you do outside price, and then you do all of these exactly like they are. Okay, so the outside price, that's the cost to buy it. So if we just buy it, we're going to pay $25 a part times 20,000 parts. 500,000. But if we make it, all we do is bring all of these costs down. So $9 for material. So 9 times 20,000, it's 180,000. 5 times 20,000 is 100,000. 1 times 20,000 is 20,000. 2 times 20,000 is 40,000. 13 times 20,000. That's a huge number. 13 times 20,000, 260,000. Okay. So if I add these up, the cost to make them, it's 30 times 20,000, should be 600,000. I feel like I lost something in this problem. Like there should be more to it than this. So 180, 100, 20, 40, and 260 is 600,000. But this is only 500,000. Oh, wait. Nope. This 260 would stick around. This 260 is going to stick around. So even if we make it, like even if we buy it, this 260 is going to have to get allocated to other product lines. So this is a common allocated cost, so it would not go away. So 760,000 is the cost, the total cost to buy it. So let me double underline those. So if we buy it, it's going to cost us 760. If we make it, it costs us 600,000. So we are worse off by 160. So do not buy. Continue to make. You are better off by 160,000. Okay. Because that 260 does not go away. Okay. All right, next is special orders. And so special orders are a one-time order that you can accept or you don't have to accept. So this is when someone calls you and asks for a good deal. So what I usually use as an example right now, so my brother does body work for a living. So he runs a body shop. The one he runs right now is outside of Kansas City. It's kind of near Great Wolf Lodge in the Legends area, outside of Kansas City, and he manages that location and then one other location. But before that, he used to work in Junction City, Kansas, and he ran like the body shop that was attached to Dick Edwards in Junction City. So he ran that body shop. So many years ago, I would say, gosh, it was probably like 2006 or 7. I feel like it was 2006 or 7. He was working at that body shop, and it was, I think it was springtime, and it was when that tornado went through Chapman. And so there was a tornado that went through Chapman, and then it kind of floated over Junction City. Like it didn't go, like it wasn't a tornado in Junction City, but then it ended up coming down into a tornado again in Manhattan, and it hit like Little Apple Toyota, and it kind of hit campus a little bit, and then it kept going. So that was a long time ago. And when that happened, my brother went to bed that night like everything was normal. But the next day he got up and he went to work, and it was crazy. He does body work, and all of the vehicles and equipment and stuff that got damaged at Fort Riley had to be fixed immediately. So there was a short-term amount of time that he needed all of those vehicles fixed. So he had an exclusive agreement with the insurance company that insured all of those cars at Fort Riley, and he had to get them all fixed. So he went to work that morning at like 6 a.m. because he always does. And he worked all the way through until like 2 o'clock in the morning. And then he went home and slept for a few hours and was back by 6 o'clock the next morning. And he did that for like 12 days straight because he had to get all of those cars fixed. So when he did that, he was so busy. So if someone would have came in during that 12-day period and been like, I can bring you 100 cars to fix if you give me a 50% discount, he would have said, no way. I'm super busy. Don't talk to me. Come back in a couple months. Okay, because he did not have the time to do it. So what that's called is excess capacity. We will only consider special orders if we have excess capacity, meaning that we've got some downtime. Our employees are hanging around and they don't have enough to do. But at that point, back then, my brother was bringing in friends from other towns to help him process all of these cars that needed fixed as quickly as possible. He did not have excess capacity. But if you went to him today, we really haven't had any snowstorms to speak of or anything. It's, there's not a lot going on. And so he probably has some downtime. He probably has some employees who are kind of hanging around, and maybe he doesn't have enough work to do for them to keep them busy. So if you came to him today and said, hey, I can bring you 40 cars to fix if you give me a 10% discount, he would say, maybe, and he would consider it. That doesn't mean he's going to do it, but it would mean he would consider it. So we only consider a special order if we have what's called excess capacity, which basically means downtime. And so one thing to consider is when you're considering accepting special orders, you may or may not want to do it, because if you accept a special price and your current customers find out you accepted a special price, they might start demanding that price as well. So you have to be kind of careful. Okay. So we have Jamestown Candleworks has just received a request from the Williamsburg Foundation for 800 candles to be used in a special event for major donors. So this is a special order we're currently considering. We are Jamestown Candleworks, and this Williamsburg Foundation has contacted us and said, hey, I'd like you to make us 800 candles. The candles are going to be used as the only illumination in the reception room, and they're going to be given out as gifts to the donors as they leave. The candles are going to be imprinted with a special logo, and it will have no effect on our normal sales. This sentence is referring to capacity, having excess capacity. This does not affect any of our normal customers. So the normal selling price of a candle about this size and weight is $3.95, and its cost is $2.30. So the cost of this candle is about $2.30. It's $1.35 in material, 15 cents in labor, and then overhead is about 80 cents a candle. Now, of that 80 cents a candle, I would branch off of here. Because it says that the variable part is 5 cents and the fixed part is 75 cents. So some of it relates to like variable costs for every additional candle. It's going to cost 5 cents, but the other 75 cents represents fixed overhead. So fixed overhead is like rent on the factory and things like that. And rent on the factory isn't going to be more or less if we accept this order or we don't accept this order. So fixed costs, fixed overhead is never going to be relevant to our decision when we're looking at the special order, because we're not going to pay more rent or less rent if we accept this order or we don't. So it does not differ between alternatives. It's irrelevant. Okay. So to make this order, we have to put that special logo on there, and we have to buy a mold to do that. It's going to cost us $800 to buy the mold. That's a lot. That's a lot. In addition, they want a special wick that contains a gold-like thread that adds 20 cents to each candle. That's a lot of information. We got a lot of stuff going on here. So an extra 20 cents for a gold-like thread. And then because of the large order and the charitable nature of the work, Williamsburg Foundation is asked to pay $2.95 a candle. That's not enough. That's not enough. Because currently we sell them for $3.95 a candle. They want $1 off, and they want a special gold-like wick, and we have to pay $800 for that mold. That's a lot of money, okay? So the question is, should we do it? And that's a hard question, because the first thing we need to do is we need to run the numbers and see where we're at. But we also have to consider that this is a charitable event, and each of the candles is going to be given out as a gift to the donors. And we can put a little sticker on it. This is like donated by or provided by us. And we could say that, you know, we gave them this good deal, right? But let's go ahead and let's just run the numbers and see where we end up, because we don't know where we're going to end up until we actually calculate it all out. It doesn't sound like it's going to work well. It doesn't sound like it's going to work well, because I know I'm going to have to pay an extra $800 for this mold. And we're only talking about how many candles? How many candles do they want? They want 800 candles, but I'm going to have to pay $800. I'm only looking at making $2.95 each. Ugh. Okay. So here I have per unit costs, and then here I have in total for the 800 candles. When I'm doing this in real life, like I would use Excel and I would just do equals times 800 on all these rows, which would be no big deal. But sometimes I just do all of them per unit, and then at the bottom, I just take it times 800, and I don't even do any of this. I'm just like, all right, what do I make per unit? Times 800. But because I'm showing my work really nicely for you, here's where I'm at. Okay. So one of the things I would tell you is that on your exam, on your final, when I do this class during the day, I usually put like a 15-point problem on the exam doing this. And sometimes students just say, like, if the question is like, should you do it? And then they say, no, you should charge $3.95. Like you're losing $1 a candle. And that's all they put. They just say, no, you lose $1 a candle. And I just do minus 15. Like I don't give them any credit for that, because what I'm looking for is this specific option. This company, Jamestown Candleworks, this Williamsburg Foundation did not offer us $3.95. That's not even on the table. So we can come back at them and tell them we want more, but that is not what I'm asking you to analyze here. What I'm asking you to analyze is, do you make money at $2.95? So $2.95 per candle. And so 295 times 800 is $23.60 in revenue. Man. Okay, so my variable costs So all I want is my variable ones. And I was kind of specific about that when I wrote variable costs right here, because I'm only looking for out of that 80 cents, the variable portion, because that's the only thing that's actually relevant to my decision. My rent and stuff is not relevant. So $1.35 for material, 15 cents for labor, 5 cents for overhead. And then that special wick was, I'm pointing at my screen like you guys can see my finger, I'm like pointing at it, is 20 cents. Okay, so my total of my variable costs, if I add those all together, $1.35, 15, 5, and 20 is $1.75. So that's interesting because I'm selling them for $2.95 and I'm only at $1.75. So things are looking good. Let me go ahead and take each one of these numbers times 800 candles. I wish I was in Excel so I could just multiply down. 0.15 times 800 is 120. So this one would be, would be 40, I think. And this would be 160. Let me see if I did my math right. I'm a little nervous now. 0.15 times 800, 0.05 times 800. Yeah, 0.2 times 800. Okay, so 160, 40, 120, and 1080. I'm at 1400. All right. There's one more thing I haven't considered, and that's that mold. That mold is specific to this job. I don't need that mold unless I do this job, and I'm going to have to pay $800 for it. And I always ask my students, like, is that 800 per candle? And they're like, no, it's 800 in total. And that's right. So that special mold is going to cost me $800. And so for 800 candles, that's $1 a candle. So my total cost is $2.75, $1.75 and $1. So I'm going to make 20 cents per candle. So I'm going to make money. I didn't know if I was going to make money. In total, my total cost is $2,200. So $2,360 minus $2,200. I'm going to make $160 if I accept this job. $160 isn't a lot of money, but I didn't lose money. And the other thing I would consider is that if I did this job again next year, like for one thing, it's charitable in nature, it's going to be good PR for us. We should probably consider it anyway. We are making some money. And if next year I can do this job again, I won't have to buy the special mold again. And then I'll make $1.20 a candle. And so then on the 800 candles, I'll actually make some decent profit, as long as they don't change their logo, which they probably would, just to mess with us. And then we'd have to buy a new mold. But that's where we're at on this. And so I would say, yes, go ahead and accept the special order. And so we're going to look at just the quantitative side of it. We do make money. And as long as this number is positive, I'm going to tell you to go ahead and accept it, knowing that you guys need to consider all the non-quantitative reasons. Okay. So let me see here. I think I'm going to stop the video and start part 2.